Welcome, everyone. We'll get started in just a few seconds. We're going to let participants take a few seconds to join. Thank you, everyone, for joining. Today is Emergency Housing Vouchers office hours. The focus of today's session is on reporting in VMS. My name is Liz Stewart. I'm with the Technical Assistance Collaborative, but we have a number of HUD staff joining us today to discuss this topic. Before I hand it over to them, I just want to go over some brief logistics. Next slide. This session is being recorded, and the recording will be shared on the HUD Exchange, and I'll drop that link in the chat in a minute. All participants are muted, but please submit your questions for HUD in the Q&A box. You can use this chat feature to share thoughts, experiences on your EHV implementation, but any questions, and again, specific to reporting in VMS, we really want you to submit those to the Q&A box. And we'll also add some resources in the chat if you are joining today and you are someone experiencing homelessness or a victim or survivor and in need of assistance. Now I'd like to hand it over to Caleb Kopsik in the Office of PIH to go through today's presentation.
Thank you. Next slide, please. All right. Thank you very much, everybody, for calling in. My name is Caleb Kopsik. I'm with the Quality Assurance Division in the Office of Housing Voucher Programs in PIH. We're here today to talk a lot about VMS, the Voucher Management System, and proper reporting. So I'm going to run through a few things, and I'm hoping to have some time for questions and answers at the end. We'll talk a little bit about QAD and what we do. We're going to talk about the EHV, the report guidance sources. We're going to talk about line item definitions, and then we'll move into Q&A. So without any further talking, let's get into it. The Quality Assurance Division is located within the Office of Housing Voucher Programs. We work to improve the management performance level, accountability, and data reporting of PHAs in the voucher programs, and maximizing cost and management effectiveness. Our staff are located throughout the country, but outstationed through headquarters. We are located literally all over the country, and there are several teams. Next slide, please. So current Quality Assurance Division projects include Financial Management Review Team, which does reconciliations of the regular voucher program, restricted net position, the unrestricted net position, confirms the availability of cash, and reviews program costs for eligibility. We have the VMS Review Team, which reviews and validates the unit months leased and the HAP expense data submitted in VMS for the regular HCV program. We have a rent reasonableness team that reviews market rents charged to the voucher programs, determine if rents are in line with local market. We have a debt collection and repayment agreement team that negotiates and finalizes debt repayment agreements on behalf of the voucher program office. And finally, the team that I work with is the EHV team, and we do programmatic and financial reviews of the EHV programs, which include looking at the VMS data. So you may end up being reached out to as part of our reviews. Our reviews are risk-based. We reach out to PHAs and work with them to correct problems and reporting issues, programmatic issues, and making sure that the financials are properly reported. So next slide, please. There's several different reporting guidance sources that will be used in this presentation. And I just wanted to give you kind of a quick and easy rundown of those that apply to the VMS reporting. The first and most important is probably Notice PIH 2021-15. This was the implementation notice for the EHV program, and it covers a lot of the allowability for expenditures, when those expenses may be made. You'll see this frequently cited in any type of report regarding the EHV program. Followed by is 2021-25, which is the VMS and FDS, the financial data submission reporting guidance. This notice covers line items, transactions within the financial system, what HUD generally expects to see. So definitely something that is worth taking a look at. You'll see the EHV frequently asked questions. There's a lot of information in there that covers reporting and allowability of expenses. There's a VMS quick reference, which just covers the line items that you'll end up reporting in the VMS, and a user's guide that goes more in depth in how to report those line items. We're not going to cover as much about the how-to hands-on work for this, but we're going to talk about what should be on each of the line items. So we're also going to talk a little bit about service fees, because there's several line items in the VMS that are related to those service fees. And notice 2023-23 covers what those expenses are, when they're allowable, and what documentation is required. So those will be, generally speaking, those will be where all of this information comes from, unless we cite something else. So if we can move to the next slide, please. All right, so why is it important to properly report in the VMS? One of the main reasons is to avoid any findings or concerns during a review or audit. Definitely don't want to have money owed back. And if you improperly report in the VMS, you could potentially owe some money back. Reporting properly and timely can help you avoid funding and cash flow problems. We've worked with several PHAs over the last couple of years where they've needed money to pay HAP and hadn't received it, but unfortunately they hadn't updated VMS yet to show that the need was there. So if you don't properly report in the VMS or timely report in the VMS, you could run into those kinds of issues. And finally, it allows HUD to project for future funding. As we move forward in this program, the funding was all allocated at once under the ARP, the American Rescue Plan. So HUD needs to plan for future funding and eventually for program closeout. Having accurate data in the VMS helps HUD do that and make sure that there's smooth transitions for everything. So next slide, please. We're going to talk for quite a bit about reporting UMLs and expenses properly and maintaining the appropriate documentation. You have to remember that anything that you submit to HUD, whether it's PIC or VMS or FAS or anything else, is subject to audit or review. And anything that is submitted has to have the appropriate backup documentation to support. If the documentation isn't there, the submission is incorrect. So you need to make sure that that's there. Next slide, please. Just a few general notes on reporting that apply across all of the line items we're going to discuss today. VMS has EHV categories 1, 2, and 3. Now, you can report in any of these 3 categories, but you should only report in category 1. There was some discussion of how categories 2 and 3 would be used, but there is no official definition for those. So generally speaking, only report in category 1. Again, PHAs have to have appropriate supporting documentation for every line reported in the VMS. This consists of system-generated reports. If you have offline spreadsheets and you have something that doesn't come out of a system, you have to have the appropriate supporting documentation for those spreadsheets. Unverified, unvalidated spreadsheets on their own are not sufficient documentation for any review or audit. So you need to make sure that you have everything to support every single line. Next slide, please. All right, appropriate supporting documentation for all of this includes your system-generated monthly VMS reports. These include all of your UML data, your HAP data, and your adjustment data. Most data systems that PHAs use have a VMS report, and you need to save those reports to support what you've put in the VMS. When there's a review that goes on, we'll look at your monthly HAP registers. We'll look at your monthly HAP contracts that are on hold or for abatements. We'll take a look at your portability reports. You'll need to have your monthly general ledger detail reports, especially for your administrative and service fee line items. You'll want to take a look at we'll want to take a look at your monthly trial balances, and we'll use those as part of our financial reviews. You'll want to have your monthly bank statements and reconciliations for any account that holds EHV funds, regardless of whether or not the account only holds EHV funds. You need to have, even if it has HCV funds, public housing funds, mainstream funds, you still need to have a bank reconciliation. Finally, you'll need to have your forms 50058 and associated supporting data. You need to make sure that all of the family data is correct and up to date, because that supports the HAP that goes out the door. Next slide, please. Just like HCV, the UMLs and the HAP expenses are reported in the VMS when incurred, but not until paid. So it's accrual reporting. If a unit is under abatement or on hold, you don't report the UML or the HAP. And most of the PHA systems will do this automatically. But you need to make sure, if you're trying to do things offline, that you have these abatements reported somewhere else. And then as the abatement clears, you go back and update. This doesn't apply to administrative or service fee expenses. Those should be reported immediately when paid. You want to note that vouchers should be reported in only one category. They shouldn't be reported in multiple categories. For example, if you have EHVs, you do not also report them under your AOV, your all other voucher count for HCV, which is a common error that we've run into. You want to make sure that they are reported only as EHV, because they are a separate funding category. If you report them in your AOV, you're going to run into a situation where you'll eventually owe HUD money back, because you'll be overfunded for the voucher program, and that would have to come from non-federal funds. Definitely not something you want to run into. You want to make sure that you update the UML and HAP data in VMS regularly to avoid any finding or concerns during reviews and audits. And one thing to keep in mind, the program data drives financial data and VMS reporting. Your financial and VMS reporting are only as good as your program data. If you are way behind, for example, on your re-exams, and you're still reporting VMS, it's likely inaccurate. You can't have, in one example with one PHA that we've worked with, the PHA was behind roughly about a year on re-exams. They were still reporting the VMS, and then would come back and say they were short. Unfortunately, by the time they got caught up, there was no way to get any additional funding for them. So if there's problems in the program side, the financial data will be incorrect. The VMS reporting will be incorrect. So one other thing to keep in mind is, regardless of the PHA's MTW status, EHV is reported the same way as regular HCV. There's no exceptions made in general, unless you have explicit writing from, or approval in writing from HUD. Next slide, please. All right, so we'll talk through each of the line items in turn, and we're going to talk about the definition of them and what kinds of pitfalls you might run into. So in terms of family reporting, the EHV UMLs are the total EHVs under lease from the initial or renewal funds awarded. These vouchers are reported in this category only if the PHA received vouchers for this program, and a voucher is reported in this category only as long as it is used for an eligible program participant. And when we say eligible program participant, what we mean is that the family was properly referred from a COC with which you had an MOU or another associated agency with which you had an MOU. They were referred, you went and screened them, you got them the housing search assistance, got them out there, got a HAP contract signed. And once the HAP contract was signed, they were admitted to your program properly. The unit passed HQS, for example, the rent was reasonable, everything else matched. So you want to make sure that for eligibility purposes, the family meets all of the eligibility criteria that's required by the program. The second family line is emergency housing vouchers, number of new vouchers issued, but not under HAP on the last day of the month. These are the families that are sitting out there in search status. So you want to make sure that you don't receive any administrative fees for these. These are only reported here. This is a memo line field. All right. Next slide, please. All right. There's several HAP line items, and all of these add up to the total HAP for the monthly for the program. The most straightforward is your EHV HAP. These are the HAP expenses incurred for the EHV program for the units in this section. These are all of your HAP expenses as of the first of the month for eligible units. These should match to the ones that are reported in your on your family on the EHV UML field. The second line is the EHV HAP expenses after the first of the month, and typically this is when a family leases up mid-month at any point after the first. So this is the total HAP expenses for those. These are for the families that you wouldn't start reporting UMLs since there's no UML on the first. You would start reporting them on the first as of the following month. The third line that adds to this is your EHV FSS escrow deposits. So these are deposits made from EHV directly to the family's FSS escrow account. So now we'll talk a little bit more about this when we get to escrows, but these deposits don't come back. They're permanently part of your HAP expenses, at least as of the end of 2023. And finally, I'm just noting this here. There will be an EHV HAP spent on permissive deductions. This is post-HOTMA implementation, and it has not been implemented yet. More guidance will be forthcoming, but will be the total amount of HAP that was spent as of the first of the month on permissive deductions. These would not be eligible for renewal EHV funding, and you have to exclude any of these expenses that have funding received from outside the EHV program. So again, more guidance will be forthcoming on this, but I just want to make sure it was noted here since you will see it in the VMS. Next slide, please. All right. FSS escrow forfeitures are kind of a unique situation. Previously, and for years and years, if there was an FSS escrow forfeiture, it went back to the program from which it was derived, whether it was public housing or the voucher program. That's no longer the case. In this case, it's the total value of the FSS forfeited by tenants during the month. This is just a memo reporting field at this point. It does not get added back into your RNP or EHV RNP. It does not get added back anywhere. It's just so that HUD knows exactly how much money was forfeited. This amount doesn't get deducted from HAP expenses. It does not get credited back. It has to be reported wholly separate. Now, there's an REAC accounting brief out there on it to talk about how it should be reported financially in your general ledger and FAS. I've included the link for the final rule, since the final rule covers how all of this actually works. But keep in mind, these funds do not come back to the EHV program. They instead remain available for FSS program participants in good standing. How that's handled, you have to take a look at the final rule, but just something to keep in mind. When you report on this line, you report the total amount that was forfeited, but it does not move back to the program. All right, next slide, please. All right, EHV, the fraud recovery total, this is how much the PHA received back. This is just the HAP portion for EHV. It is not the full amount, it is not the admin. So this is exactly how much. It's either 1/2 of the amount recovered or the total recovery minus the costs that are incurred by the PHA for that recovery. Because keep in mind, it's the higher of the two. You can either keep 1/2 or you can keep the actual expenses incurred. It does not get deducted from the HAP expenses reported for the month, though this amount does get added back to your RNP. The regulations are Part 790 and 24 CFR Part 792. They've been there for quite a while. If you haven't taken a look at them, they're worth reading. There's a REAC accounting brief number 27 that covers how these transactions are recorded and reported in FAS and what you would typically see in the general ledger. And there's an accounting brief number 18 that covers how these are recorded and reported for portability purposes. So just some things to take a look through and read through. They'll help you properly report these on this line as well. Next slide, please. Two things to keep in mind. You want to make sure to maintain appropriate documentation for costs incurred if you spend more than 50% to obtain the recovery. This includes if you have staff payroll, any legal expenses, any court costs, court fees, investigative costs. It all has to be documented. And if there's ever a review of your agency, they will be asked for. One thing to keep in mind is that cost to obtain the recoveries has to be both necessary and reasonable. And this is a 2 CFR Part 200 requirement for all parts of federal programs. Necessary and reasonable means that you're not artificially inflating costs and you're not expending funds that a normal, prudent administrator would not do. For example, you wouldn't spend $20,000 to $30,000 to go after $500. That would be, it may be necessary, but is it reasonable? No. So the other thing to keep in mind is that some PHAs have developed fraud departments, which is great to try and catch and deal with this. But if the department is not collecting sufficient funds to support itself and you're trying to support it wholly from those funds, it may not be necessary or reasonable. It may not be necessary or reasonable to maintain that department in and of itself, just to take 100% of those fraud recovery funds. All right, next question or next slide, please. The administrative expenses are where a lot of PHAs get a little tripped up. There's 3 categories for this. There's preliminary fee expenses, placement issuance fee expenses, and ongoing administrative fee expenses. Most PHAs we see are only reporting in the ongoing administrative expenses. We see very few PHAs that have split this out, and that's okay. It's up to each individual PHA how they want to report on all 3 of these lines. But keep in mind that if you spent preliminary fee money, it should go on the preliminary fee expenses. If you spent placement issuance fee money, it should go on that line. So make sure that, if you're expending those types of fees, that you're reporting properly in the VMS. All right, next slide, please. All right, so keep in mind, all the administrative expenses, regardless of which of those lines you report them on, has an impact on the unrestricted net position. And when we get to the unrestricted net position, we'll talk through that calculation and how that gets reported. again, you want to make sure that all of these all expenses are both necessary and reasonable. You don't want to spend money in a way that's not necessarily reasonable, because it's highly likely that you would have to pay it back. And when it gets paid back, it comes from non-federal funds. I've included the link here for the 2 CFR Part 200 Subpart E that covers an awful lot of what it means to have necessary and reasonable costs. Next slide, please. Okay, so reporting the RNP and UNP and the cash are very important in the VMS. And we've seen very, very common errors here where PHAs do not report RNP or UNP, which is incredibly problematic from a standpoint of knowing when you need money. Time was when PHAs couldn't report a negative number on the RNP. That is no longer the case. PHAs can now report negative numbers in the RNP, and that generally triggers the HUD Financial Management Center to disperse additional cash to you if you have EHV HUD held reserves. It's a pretty long definition, but if we go to the next slide, I've tried to make this as simple as possible. Simply put, EHV RNP is the prior month RNP adjusted for any newly reported HAP expenses, plus the EHV HAP revenue received during that month, plus the EHV HAP portion of the fraud recovery received for the month, plus any revenue transferred in to support EHV HAP and expenses. But keep in mind, this does not include portability in HAP expenses. Portability in HAP is actually an administrative contract, and we'll cover that when we get to the UNP. You have to include all of the EHV HAP expenses incurred and paid within the month and subtract that from the total above. And you have to subtract all EHV FSS escrow deposits. So basically, it's the prior month RNP once you've adjusted it for any newly reported HAP expenses for prior months, the EHV HAP revenue, fraud recovery revenue, any transfers in, which there really shouldn't be to cover the EHV HAP expenses, minus the EHV HAP expenses incurred and paid, and the FSS escrow deposits. EHV service fees are not part of the RNP. We see a lot of PHAs that report service fees as part of the RNP, and they really should not be. We'll talk a little bit more about this, but the impact on the RNP as reported in the VMS is effectively zero for service fees. And one other thing to keep in mind, EHV RNP should be updated along with any other EHV related changes to VMS when making a prior month correction. The RNP should flow along with any changes in expenses that you report. And if you don't update the RNP, typically what we see happen is that PHAs wind up not receiving enough cash. So just something to keep in mind. That you want to make sure that those are completely updated. Next slide, please. Okay, so the EHV service fees, there's several lines for you to report the EHV service fees. Mostly for all of them get added in as reductions to the EHV service fees or to the revenue that's received from it. But this kind of lines them up with all of the allowable expenses in the notice. So you should have EHV service fees for housing search assistance expenses. These are typically the types of expenses where you have staff working with families to locate a place to live, fill out applications. You may have a third-party contractor doing that sort of work. You may have the COCs work with you on that, and the COC may be being reimbursed for that. The other line is for security and utility deposits, rental application and holding fees. Again, if there's a deposit needed for the family to obtain a unit, it would be reported here. There's a service fee, owner incentive expenses. This would be any owner incentive that you give, whether it's a damage deposit or it's a straight fee for the owner to work with his family. Next slide, please. There's an other eligible expenses, and this would be anything that doesn't fit into one of those first three categories. One of the new lines is the unexpended service fees. And we talked about how the EHV service fees don't impact the RNP. And this is because any cash that is held that would be included as part of the RNP on the PHA's balance sheet is offset by the unearned revenue, which is a liability for those unexpended service fees. So for example, if you received $100,000 and you spent 50, you should still have 50,000 in cash and then 50,000 unexpended, which is reported as unearned. EHV service fees are only earned when they're spent. So if we go to the next slide, please. All right. All of the allowable purposes for which a PHA may use EHV service fees have to be defined in the PHA's HCV administrative plan. There is not supposed to be a separate administrative plan for the EHV program. It's included in the PHA's HCV administrative plan. This plan has to be adopted properly by your Board of Commissioners or a similar body. Again, EHV service fees are restricted funds, but they don't impact the RNP reported in the VMS. They are never to be part, this is one of the other common errors. EHV service fees are never to be part of the unrestricted net position. They would have zero impact there too. The categorization of expenses should mirror the permissible uses in the two notices, including the implementation notice 2021-15 and the service fee notice 2023-23. There's an appendix in 2023-23 that covers allowable expenses, when they're allowable, and the appropriate supporting documentation that you should have for those expenditures. Next slide, please. Right. The unrestricted net position is frequently where we see PHAs get a little bit tripped up. This is as of the last day of the month. And it's kind of it's a tricky definition, and I've tried to simplify it on the next slide. So one more slide, please. All right. We've included the VMS definition on the preceding slides, but simply put, it's the previous month beginning UNP plus any preliminary or issuance fees or placement fees that you received during that month, plus the administrative portion of the EHV fraud recovery receipt during that month, not the amount that was recorded as a receivable, but the amount that was actually received, plus any EHV portability and administrative fees, plus any administrative operating transfers in, plus the net portability in HAP, which is the revenues that you receive, the reimbursements from initial PHAs, less the expenses, which hopefully is either zero or a positive, less any monthly deficit in the administrative fees not covered by current year net administrative fees. Where PHAs get tripped up very frequently is that administrative fees are not earned until the end of the PHA's fiscal year. At the end of the PHA's fiscal year, any remaining excess net current year fees are added to the PHA's UNP. During the year, PHAs can use those funds to cover current year expenses. They cannot be used to cover prior year deficits. They cannot be used for any prior year expense. Once they roll to the UNP, they can be used for any future year expense. All right, next slide, please. All right, lastly, you have to report the EHV cash and investments as of the last day of the month. And what this means is that you should have a sufficient cash to cover three things. Next slide, please. Your cash reported has to be sufficient to cover the EHV RNP, the EHV UNP, and the unearned service fees. So realistically, you should have more cash than you have RNP, UNP, and service fees. We know that there are situations where your RNP is negative and you will have insufficient cash, for example, to cover UNP and until you get reimbursement from HUD. And that's okay. That's expected. But once you do, those should even out. Cash needs to be supported by three documents. We should see the cash reported in your general ledger. We should see the bank and investment statements that are supporting the general ledger, and as well as the reconciliations. Reconciliations are important so that you know exactly how many cash or how much money you've got. So this would include any outstanding checks. It would include any deposits in transit, those sorts of things. All EHV funds have to be held in accounts that are covered by a HUD-approved general depository agreement without any unapproved modifications or riders. We're aware that certain banks require you to assign a modification, and please note that if you ever receive a review on this, those modifications will be found to be incorrect. The only time that you can use any deviation from the form HUD 51999 is with explicit approval from HUD. And finally, PHAs can only invest EHV funds in appropriate investments. This means usually that you're using government bonds or treasury bonds, those sorts of things. If you have questions on if something is an appropriate investment, please reach out to ehv@hud.gov and we can let you know. You can't invest in things like mutual funds. You can't invest in unsecured debt. Those sorts of things are just not permissible. So with that, I'm going to wrap it up, and we have about, it looks like about 20 minutes for questions. And again, if you have questions after this, please reach out to us at ehv@hud.gov. Feel free anytime to reach out with questions. And I think, do we have any questions in the chat or in the Q&A?
We do, Caleb.
All right.
We do have a couple of different questions.
Sure.
I think I'll start with one that we got more recently, since you were just talking about cash and investments. Can you clarify, is the cash from the fee funding that we receive? I thought it was from the HAP not expended. Can you clarify what that includes, those cash and investments?
Sure. It should be all cash and investments received for the EHV program. So whether it's HAP, administrative revenue, service fees, it should include all of the above.
Great. Another question, I think this is related. If our PHA has interest earned monthly, will this be considered other revenue? How do we report this in VMS? Will this affect the RNP or the UNP?
No. So in the end, it'll affect the UNP. However, there's additional guidance that will be forthcoming from the Financial Management Division regarding the reporting, recording, and return of interest. So hold tight. There will be some more guidance coming. Just make sure that you are actually tracking the interest earned on EHV investments. And interest earned on EHV includes both the HAP, the admin, and the service fees. So it's not just like with the HCV program, you only return interest on HAP. For EHV, it's all funds.
Okay. Another question. Can we offset the cash with the current liability when we report cash in the VMS?
No, no, you should include only, you should include basically it's your lines 111. All of your cash lines should add up to that amount. The cash shouldn't be reduced by a liability.
Okay. Another question, am I understanding correctly that if we are not paying HAP due to an abatement, then we are not to count the ULM for the term of the abatement? The unit is still under contract.
Correct. And this is the same for HCV as well. So this is reported exactly the same as HCV, where you don't report those abatements until the cash actually goes out the door.
Okay. All right, another question. When I report the EHV on the VMS and do not have any HAP after the first of the month, I get an error and have to enter a reason. It then triggers a hard edit.
Definitely reach out to your FMC financial analyst on that. I'm not sure why it's doing that, but if it allows you, I've seen some PHAs able to enter a 0. So it may be possible to do that, but you want to check with your FMC financial analyst first.
Okay. Where to report the interest income on service fee? Do we include it in the unearned revenue?
So most PHAs end up reporting it, and HUD doesn't have any official guidance on this. Interest on the funds will end up being returned to Treasury at some point. So typically you would see the interest on all of these go into a payable. So you'd recognize the revenue as interest, but then it would be the revenue and the cash received would be offset by the liability for what would be going back to Treasury.
Okay, there's a couple of questions related to portability. Does that make sense to cover those? There's like at least 3 or 4. Is it okay if I go through
Definitely.
those? Okay.
Yeah.
One of the first ones that we got, how do you get portability tenants off of our spreadsheets who got absorbed into another PHA jurisdiction?
So I'm not quite sure what spreadsheet means. If you're looking at the EHV dashboard and you're having issues there, reach out to EHV research at HUD.gov and they can help you from there. As far as your own software, each software is a little different as far as how that's handled. Typically, you would have a port out 5.8, but each one is a little bit different. You'd want to reach out to your software provider.
Okay, and this one is somewhat dashboard related, VMS related. So I'll just put it out there. And if you think it should go to the EHV at HUD.gov, just say so. I have a family that ported out, leased up, and we are billed. However, it is not showing as such in the dashboard. The family shows on our VMS, the 50058 from the RHA shows as EHV and us as the Housing Authority billed, and the family is in PIC.
Definitely reach out to EHV research at HUD.gov, and they can help you track that down and get it corrected.
Okay, next question related to portability. For portable EHV, should the IHA maintain the EHV as a VMS type to be included in the allocated count, or should it be a port out voucher VMS type?
Sorry, could you read that one more time?
Sure. For a portable EHV, should the IHA maintain the EHV as a VMS type to be included in the allocated count, or should it be a port out voucher VMS type?
If it's a port out voucher and you're being billed, it should be included in VMS as EHV because you're paying for it from EHV.
Okay, another question on portability billing. How are portability billing expenses and reimbursements reported in relation to the RNP and the UNP?
So portability is not reported as part of the RNP at all for port-ins. If you're administering port-ins on behalf of another PHA, it impacts the UNP. And it impacts the UNP because it's an administrative contract between you and the other agency. So you would report the port in, and you would report the record the port in revenue and the port in HAP expenses. But you want to make sure that you're recording these separately on your general ledger so that they're easy to trace and you can track down which PHAs owe you money. So
Okay, another request was to, if it's possible, could you review how you calculate the RNP and the UNP?
sure, if we can go back to those slides. So let's start with the RNP because the RNP is the simple one. There we go. All right, now forward one more slide. There we go. So the RNP, keep in mind your RNP number that you report into the VMS is a rolling number. It's going to be adjusted when you make those payments. So you take your prior month RNP, add your revenue that you received from HUD for that month, add in any fraud recovery revenue received during that month that was for HAP. So for example, if you received $100 and you're just taking the 50-50 split, $50 would go to HAP, $50 would go to admin. Any revenue transferred in, we really shouldn't see any revenue transferred in, but if you did, it needs to be there. And then you subtract any and all HAP expenses incurred and paid within the month, and any and all EHV FSS escrow deposits. The net of all of that would be your RNP. So just regular revenue less expenses. The only wild card is those adjustments for abatements. So that's the RNP. If we go to the UNP, there we go. The UNP is a little bit trickier. So it's the previous month beginning UNP plus preliminary fees, issuance fees, or placements fees received from HUD for that month. You shouldn't receive any preliminary fees anymore, just fair warning. And then the issuance and placements fees, you probably shouldn't be receiving anymore, but then you want to add in the administrative portion of the fraud recovery. Again, if it was $100 that you got, and you're taking the 50-50 split, 50 would go to RNP and 50 to UNP. You would bring in the portability in administrative fees, and then any administrative or operating transfers in, plus your net port in HAP. Again, port ins are an administrative contract. They are not part of your regular HAP. So the net port in is the HAP revenues you received less the expenses you put out the door under that administrative contract. And then any monthly deficit that isn't covered by current year net admin fees. So you would want to make sure that you're tracking those current year fees separately because you don't earn them until the end of the fiscal year. So your UNP will not include those current year net administrative fees. All right. So next question.
Yeah, I think this might be related. At the end of the fiscal year, should we use admin fee earned during the year or admin fee received during the year to calculate for the UNP?
So you should use the UNP received during the year. Now, some PHAs will do accruals and move those admin fees. For example, if they were owed admin fees, they'll move those back into the fiscal year for which they should have been received. And that's fine. But most PHAs will record only what was received. And keep in mind, if there's ever a proration on EHV, you would take the prorated amount. You wouldn't take the full amount.
Thank you. I think, Caleb, I think you had a whole section on FSS, HAP and FSS, and so this may have been answered, but could you just clarify, because this question came in early on, do you have to have a separate FSS escrow account for EHV participants?
No, it can be within the same account that you hold all other FSS participant accounts. You just have to be
Great.
able to separate them out by participant.
Okay, we still have a few others to get through. If you have 0 new vouchers issued, why does the system not allow it? It gives an error and I must enter a number. And I apologize if that was related to something that you said, Caleb, but I
No,
don't know if you.
I'm definitely concerned about that too. It shouldn't be requiring you to enter anything if you don't have any. Again, reach out to your FMCFA and let them know that there's an error. They may end up referring you to the help desk, but for those kinds of system issues, the FMC is the first point of contact.
Okay, and another question asking just for clarification and something that was said. Do you or do you not include liabilities against the cash when reporting cash in EHV?
So if we did, typically you would not. However, I'm being reminded that on the VMS users manual, there's other current liabilities that would reduce the available cash. So those would be excluded.
Okay, so make sure to look at that VMS users manual.
Correct.
Another clarifying question. If we paid an EHV HAP expense in May, but it was for April, when will we report on this?
You would report it for April. So if the expense is for April, you report it in April.
Okay. If a tenant has been placed on hold so that no HAP is paid to that tenant for the month, do we not count that UML for the month, just like an abatement?
Correct.
Okay, a question. The UMLs in VMS from our Yardi software and PIC do not match. Which number is correct?
Huh. There's a couple things that can happen with that. One could be, especially if pick is lower, there could have been some fatal errors. For some reason, a 5.8 was not transmitted to pick. For those kinds of questions and those kinds of issues, you'd want to reach out to EHV research at HUD.gov. They should be able to work with you through that. They may end up sending you to your software provider if there's, depending on what happened, how long ago. So, and keep in mind that if you don't have a new admission, you shouldn't be able to submit um, a re-exam or anything like that. What you can do is you can run an ad hoc report out of pick for your agency, and you should be able to bounce that against your software system and see exactly which 5.8s are missing.
Okay, looks like we have a few more questions, just a few more that are relevant to VMS. Can you count 0 HAP units even though no payment was made?
Yes, for the usual amount of time. So, but 0 HAP units are usually counted for 6 months, 120 days.
Okay, and the last question I see that's relevant, do all of the port costs go to admin?
Correct. So portability in, I should say. Port outs are a HAP expense. And then the administrative fees that are paid out are an administrative expense.
Okay, Caleb, I think you're off the hot seat for now.
Thanks,
And we
everybody.
are about time. There are just a few reminders I want to just go through with everyone. First, as Caleb said, if you have questions after this presentation, you can go and reach out to EHV at HUD.gov, and I put that link in the chat. Also want to make folks aware as we're talking about service fees and where they are getting reported. There is a new service fee guide out and talks a lot about some of those other uses that came out with that more recent notice. So I will add the link there. This presentation is going to be posted along with the materials, and the recording is going to be posted to the HUD Exchange. And so just make sure to check that. And it should be getting up within a couple of weeks or so. If you have other questions, you can always reach out to the Ask a Question, but it does sound like EHV at HUD.gov is probably your best bet, especially with issues related to VMS. And if you have larger needs as far as implementation or administration of your EHV program, you can also always submit a TA request through the HUD Exchange. And I'll put those links in there as well in a second. And I think that is it for today. Caleb, thanks so much for all of this great information and your willingness to answer all of these questions. And thank you everyone for submitting questions and staying engaged throughout the presentation. We really appreciate it, and we hope you have a great day.